Financial summary. Q1 2025 revenue $19.3 billion, down 9% year-over-year, below market expectations of $21.4 billion. Net profit $409 million, down 71% year-over-year, one of the biggest declines in recent years. Earnings per share EPS $0. 27 non-GAAP, below the $0.41 expected. Automotive revenue $13.97 billion, down 20% year-over-year. Vehicle deliveries 336,681, down 13% year-over-year, of which Model 3/Y accounted for 323,800 units. Operating profit margin 2.1%, significantly lower than 5% in the same period last year. Free cash flow $664 million, up 126% year-over-year. Total cash and investments $37 billion. Financial position remains strong. Reasons for poor financial report: decline in vehicle deliveries. The Model Y production line update resulted in a temporary drop in production capacity, which, coupled with weakening demand, affected overall deliveries. Damaged brand image. Elon Musk's involvement in the U.S. government's Department of Efficiency (DOGE) has caused resentment among some consumers and affected sales. Price pressure. In order to cope with competition, Tesla lowered the prices of some models, resulting in a decrease in average selling price and compressed profits. Trade policy uncertainty. The U.S. tariff policy on China and other countries increases supply chain costs and affects operations. Future outlook and strategies. Product plan. Production of a new, more affordable model is expected to begin in the first half of 2025, and the Robotaxi pilot program will be launched in Austin in June. Energy business. Energy storage revenue increased 67% year-on-year to $2.73 billion, and deployment reached 10.4 GWh, a record high. Autonomous driving technology. Launched FSD, supervised version, in China and plans to mass-produce the Optimus humanoid robot in 2026. Management adjustments. Elon Musk announced that he will reduce government work from May and focus on Tesla business to restore market confidence. Stock price reaction and investment advice. Despite the poor earnings report, Tesla shares rose about 5% in after-hours trading, mainly benefiting from the news that Musk would return to the company's management. However, considering the damaged brand image, declining sales, and policy uncertainties, investors should remain cautious and pay attention to the operating performance and market reaction in the coming quarters.